If you are self-employed and paying for your own health insurance, you probably feel like you are being punished every month. $1,200 a month for a family plan can eat 30% of your income before you even buy groceries. But there is a massive tax benefit hidden in the rules that can save you thousands, and you don't even have to itemize your deductions to get it. It is called the Self-Employed Health Insurance Deduction, and it is what we call an above-the-line deduction. This means it lowers your adjusted gross income directly on Schedule 1. It is one of the most powerful tools for the middle-class gig worker because it works even if you take the standard deduction. Quick check. Are you paying for your own health insurance or are you on a spouse's plan? Comment "own" or "spouse." There's a $2,000 difference in how you file. Now, here's the catch that trips people up every year, the month-by-month eligibility trap. According to the instructions for Form 7206, you cannot take this deduction for any month where you were eligible to participate in an employer-subsidized plan. Wait, so even if I didn't sign up for my spouse's plan because it was too expensive or the coverage was bad, I still lose the deduction? Exactly. If the option was there, the IRS says you are eligible, and you lose the deduction for that specific month. You have to look at your life month by month. If your spouse started a new job in June that offered health benefits, you can deduct your own premiums from January to May, but June is a big zero. That feels like a punch in the gut for people trying to save. I saw a post on Reddit from someone paying $1,200 a month on a $45,000 income. They were terrified that their tax bill was going to kill them. For that person, this deduction is a lifesaver. Let's say a gig worker makes $40,000 in profit and pays $6,000 a year in premiums. Since that $6,000 is less than their total business profit, they can deduct the full amount. At a 22% tax bracket, that is over $1,300 back in their pocket. Poll: what is your monthly premium? A, under $400, B, $400 to $800, or C, $800 plus? Comment your letter. I'm curious how high these prices really are this year. It's also important to remember the net profit limit. You cannot deduct more for health insurance than your business actually earned. If your Schedule C shows a $0 profit or a loss, your health insurance deduction is zero for that year. The IRS doesn't let you use health insurance to create a bigger business loss. And what about HSAs? I heard the limits went up for 2026. They did. For 2026, you can contribute up to $4,400 for an individual or $8,750 for a family. If you have a high deductible health plan, you can stack that HSA deduction on top of your health insurance deduction for a massive double win. So, step 1, get Form 7206 and check your eligibility for every month of the year. Step 2, make sure your business profit is higher than your total premiums. Step 3, report that final number on Schedule 1, line 17. Just remember, this lowers your income tax, but it does not reduce your self-employment tax. You'll still pay that 15.3% on your full profit, but your overall tax bill will still drop significantly. Check your records for any 1095-A forms if you used the marketplace, as those numbers have to match exactly. Just remember, I am an educator, not your CPA or tax advisor. This is general information based on IRS publications, not personalized advice. Tax situations vary. Always consult a qualified tax professional about your specific circumstances before making decisions.